Hey there, everyone. Welcome to this special edition of The Final Bar. Here we're talking about the top 10 charts to watch for December 2023. We've done some of these episodes over the last number of months. It's actually been a lot of fun. It's a challenge, to be honest with you, to settle in on 5 charts, but I found it to be an incredibly valuable exercise. Really makes me think, and it allows me to talk with some really smart investors like Grayson Roze, who'll be doing it with me. Welcome back to the show, Grayson. How have you been? Okay.
Always good to be here. Yeah, wonderful. Yeah. Happy holidays, everybody.
Yeah, you as well. You as well. So, I think going through this process every month, it's been challenging for different reasons, right? I mean, a lot of times it was uncertainty about the Fed. It was economic data. It's all these sort of things. Now, geopolitical issues. Yeah. Now we're getting to year end. We're getting into the meat of sort of November, December, kind of a seasonally strong period.
Right.
Where are you at when you look at the markets here? Where's your head at? I mean, how are you feeling about the conditions here going through year end?
Yeah, good question. I mean, we're doing this at a pretty different time, right? We've got a market that's actually moving higher. You know, some of the last
which is unusual, right?
Yeah, we've had a market that was cooling off, and we were, making individual picks, and then by the time we picked it and then we did the show, it was like, well, that reversed, and I don't like this trade anymore. Right. But no, I mean, a different environment. I got to say, I like this market right now.
Yeah.
When the markets do things that they are supposed to do, even if they're scary, like go down in September and October, we're following seasonal patterns. So right now we're seeing a little bit of strength. I like that. We were talking a little bit before the show too. I really like what we're seeing out of small and mid-cap stocks. Catching a bid kind of at the bottom of their range. Those things just absolutely refuse to go lower. Yeah. And catching a bid kind of at the right time. We've got interest rates cooling off, Fed policy maybe changing a little bit, and so small and mid caps picking up a little bit. I like some of the things I'm seeing technically in this market.
It feels like a lot of the themes that were sort of the story of 2023 have now started to change, right? It was all about the Fed raising rates. That I feel we're now completely behind that.
Right.
It was about rates going higher, now rates coming down. I mean, the 10-year is getting closer and closer to 4% instead of 5%. Small caps, which have been an absolute dog for much of the year, sort of range bound, popping higher. And not just those. I mean, when we were talking about the picks we're going to be sharing here, a lot of things outside of the growthy stuff that we've been talking about a lot. I mean, some other sectors like industrials, financials, maybe making an appearance.
Yep, it's not just that tech growth stuff heating up. So
now you mentioned the seasonality. We had Jeff Hirsch on the Final Bar last week. He was talking. We have the Almanac just coming out for next year,
Almanac
which is
sale
really
going
good.
On right now.
Almanac sale is happening. Good time to bring it up.
Yeah.
But when we were talking about it, I mean, 2023 has followed the seasonal playbook remarkably well.
It has.
And we had Jeff on August, September of 2022.
Yeah.
He sort of laid out, here's what the end of 22 and the pre-election year of 2023 should look like. And it's kind of just done that. And that means November, December, usually you have a big low in October, which we did.
Right.
And November and December tend to be pretty strong. So how much does that seasonality play into your thinking when you're looking at these charts?
It's kind of the backdrop for what we're seeing, right? I mean, if we're seeing the market move higher and we know that seasonal pattern is kind of playing out, that just gives me a little bit more confidence in the move. Yeah. Kind of a weight of evidence thing, right?
Yeah.
So it's not that I'm going to buy something specifically because the seasonality is behind it. Yeah. I'm going to say, oh, okay, this is happening and the seasonality is behind it. Therefore, I feel more confident in this move. So, right now with the market continuing higher, makes me feel good about it, knowing that we do have that seasonal strength coming sort of as a tailwind.
I think that's a really good way to think of it. Jeff Hirsch was talking about how it's sort of like your base case. This is what should happen, barring some big, crazy, extenuating circumstances. We've had a lot of those in 2023, so you always have to be wary. But you're right, it's kind of following what you might expect. Maybe gives it more confidence and strength into your end. All right, with that in mind, kick us off. What's the first chart we're watching in December?
Let's do it. So one of the areas that I've been watching closely is industrials. So my first pick actually is going to be an industrial name, BWXT, BWX Technologies. A little bit different for me, but I want to actually do a little bit kind of multi-time frame thing here, tell you what I'm seeing on this chart. Before I do that though, industrial is so interesting right now because we see this with some other sectors where you get a split. I like to follow not just the cap-weighted sectors, but also the equal-weight sectors, right? And so if you look at those and you compare kind of the strength of the cap-weighted sector versus the equal-weighted sector, sometimes you see this pretty big divergence in some of those sectors that have a lot more of a spread in kind of market cap. So you'll see something like communication services that's doing really, really well on a cap-weighted basis, but on an equal weight basis, not doing well. Totally different story. Yeah. Industrials, much more spread out.
Pretty good, yeah.
So right now, so we're seeing a lot of strength out of the cap-weighted index, but also out of the equal weight industrials group. It means that the strength in that space is kind of spread out. Yep. I like to see that. So I like what I'm seeing out of industrials right now. BWXT is a name that is a little bit different for me. I like to buy breakouts. This is a very, very steady trender. This thing is just refusing to go lower. I love to see the trend on this. And this is kind of one of those names, if we look at a long-term chart, I'm going to pull up a 15-year chart here. If we look at the 15-year chart, this might be one of those periods with BWXT that you got to kind of hold your nose and buy it maybe on the 50-day and just know that you're playing that long-term trend.
Yeah.
We've seen this thing do this in the past. Look at this breakout back from 2011 to 2015. When we did finally make that breakout, this thing ran higher by 190%. Right. We've been consolidating now in a very, very similar fashion over the last couple of years, since 2018, since we printed those highs. We're only up about, 20, 25%. So that's kind of where I'm looking at the strength that's coming out of industrials, looking at this incredibly steady trender in BWXT, and I'm saying, wow, maybe the next time this thing gets down to the 50-day or the 100-day, that's a steady trend. If you can see a bounce off of some of those key averages, there's some strength in this name. Love to see the outperformance of it here as well. So outperforming the total market, that's what I look at.
Yeah.
That relative strength line at the very top. So just a steady move here on BWXT might be one that just continues to chug higher as we go through the end of the year.
It's a decent start. And it's interesting. This is one of the, it really is a consistent uptrend. You see all the pullbacks to the 50. That's the bolder red moving average there.
Bolder red. And then this little dashed dotted orange line is the 100-day. So we have broken through that 50 a couple of times. But every time we get down kind of to that 100, maybe the 150, we bounce higher. This thing is just continuing to move higher.
Strong uptrend, strong start to the 5. I like it, to the 10. Good pick.
What's your first one?
I will completely change the course of this one in some ways. This is another stock that's breaking out, but maybe a little earlier in the rally. I'm going with Costco.
Yeah.
So, and I'm doing this for a couple reasons. I mean, with my picks, I'm trying to send a message of some sorts, and I feel we need to boldly pick consumer staples stocks, because if you look, some of the more beaten down ones, even some of the food products names have actually gotten a bit off of the new lows. A Walmart, for example, has pulled back, but Costco is actually rolling up pretty well. And in this sort of environment where I feel like there are a lot of different inputs to think about, a lot of different potential catalysts, a lot of different themes, at the end of the day, go back to the basics, look for stocks that have a strong setup, and then break out.
Right.
And I think what we're seeing with both of our first two picks, with Costco, the run into the high in July, while a lot of other parts of the market were actually pulling back quite a bit in August, September, October, Costco actually held up pretty well. Made a low in August, but never really undercut that. And I think that low in October was pretty telling. And then setting up really nice for an uptrend. So, stocks like this, kind of above 2 upward sloping moving averages, similar to your first pick. I think it's just a nice consistent uptrend. I like the breakout, and the reality is a breakout like this could be the beginning of something much further. So I think you have a trend follower hat, which you should be wearing, and you follow the trend higher. And then you also have a risk management hat, which you should probably be swapping on sometimes. And just be wary of stocks like this that have already had a run. This is one of the many names that are overbought right now. That's one of the concerns I have about the market tactically right here. So I think you want to be patient and look for a good pullback. But charts like this pulling back to a 50-day, if this turns into a BWXT and has these nice pullbacks to the 50, I think it gives you good opportunities to layer in on the way up. But I like that, and overall, I think the relative strength, which had been kind of sideways for a bit, starting to re-exert itself a little bit. So overall, I'll go with charts in established names that are starting to break higher. Costco's a good start for me.
I like that pick. I like that breakout. I got to say, it's always funny to me when I see Costco and it's labeled as a consumer staple, which is true. It is.
It's
But here's a funny little story. I got married a couple years ago, and when I was shopping for an engagement ring, someone said, go buy a ring at Costco. They've got great diamonds. I'm like, buy a diamond at Costco? What are you talking about? So it's funny that it's
staples and air quote.
Yeah, staples and more.
Yeah, those department store kind of big box retailers all shuffled around a little bit, and a lot of these names are really tough to bucket in different places. Interesting. What's funny is these kind of names kind of juice consumer staples a little bit and make it a little more offensive in some ways.
That's true.
And it makes me think that one of the ratios I look at is consumer discretionary versus consumer staples. That ratio and what it means has evolved a little bit, and I'm wondering if there are maybe better ways to think about that. So that's on my rainy day list. All right, your second pick. Where are we going next?
All right, my second pick is going to be Blackstone. Nice. Now, this thing has run a little bit far, I will say. It's a little bit stretched off of some of these moving averages, but it's still making a nice breakout here. Pulling back a little bit today, but I like to see the relative strength out of this thing for the last couple of months. And again, backed by strength that we're seeing out of financials. Financials have been catching a bid in the last couple of weeks. I like to see that when I see that group strength behind a name. That's another thing that's going to give me a little bit more confidence in the individual chart. So here, I like the breakout on BX. It's continuing to move higher, trading above all of those key averages. Probably needs a little bit of time to kind of reset, especially up near some of these swing highs that we've seen. But again, I got to jump back to a longer term view. Let's look at a 7.5-year view. Here's one of the things that I like about this stock. First off, it's got a character of going higher. We've got a move that's continued largely higher for the last couple of years. Huge outperformance, outperformed VTI over the last 7.5 years by 165%. And when I think about structuring a trade, that's kind of what I call it. This is a nice breakout that we're seeing right there on BX, and it's got some more levels above it that are pretty close. So when I think about kind of laddering into a position, this gives me an opportunity to get into this position potentially if I like that trade. Get into that position, and if it continues to prove me right, I've got a second entry point when it breaks out again to all-time highs. Yeah. So I like a lot of the things that I'm seeing here, not just on the daily, but also on the longer-term view. One of the other funny things that I got to say about a company like Blackstone, you're putting money to work in a company whose primary objective is to make as much money as possible, which I kind of like. It's a little bit different than the unprofitable tech trade where it's kind of like, we're saving the world, we don't care about. Blackstone, they're setting out every day, kind of kings of capital approach to just go make as much money as possible. I'm going to sleep a little bit better at night knowing that my money is sitting in BX here.
It's so funny. A lot of these names have not been done particularly well, but the financial sector in general, has ripped really, really quickly. Yeah. One of the weaker sectors, all of a sudden, in the short term, a really strong November.
Look at this move that we've seen off the low. What is that? Up 30% here in a name like BX. Big moves out of that space, but still a lot of nice setups in that space, and I like BX.
I like the weekly chart as well. That's a good pick. I accept that for pick number 2.
Okay.
So my second one, I think we've delayed long enough. Let's go to technology and let's throw a name out there. So you often pick technology here, so I intentionally try to avoid it. I think a number of my picks are actually tech related this time, a bit of a role reversal.
You stole my thunder.
I guess.
Come on.
But what's interesting about Adobe, we mentioned earlier your sort of overall take. You like the market, you like the strength, and I hear it. I'm a little more cautious on the tactical time frame. I find a lot of things are overbought, makes me a little bit nervous. I don't like fighting the seasonal tendencies, and that's what makes me pause a little bit on that.
Sure.
But a lot of stocks have had a lot of really good runs. A lot of the growthy stuff, like the Adobes and Nvidias and others, test resistance, now pulling back from those levels. Everything else now becoming overbought. And so I'm wondering if we get a little bit more of a retracement over the next couple weeks, maybe give some better entry points for some of these names. Yeah. But I think Adobe is starting to look, I think it's a good third chart to follow, but it also tells me to sort of, or a second chart, I think it tells me this could be an example of what a lot of other charts start to look like. So Adobe became overbought in November. Really nice breakout, and again, I love this rally, the setup. Again, another one that didn't pull back too much in September and October, kind of held its ground, but then resuming the uptrend. So it's sort of a leadership name. The relative strength, obviously, very strong because it's held up quite well. It's outperformed in up markets and actually is outperformed when the markets come down as well. It's recently overbought and it's pulling back a little bit. And this is, I think, a pretty good example of what we would call the fat pitch chart, which, going to the baseball terminology, sort of a pitch right over the plate. You have to take a swing at it. So good long-term trend. I like the long-term rotation from a downtrend phase to an uptrend phase. I like the performance, which has been very good on a relative basis, but it's pulling back a little bit, which gives you an opportunity maybe to buy at an ascending 50-day moving average, get an easier entry point, and ride it to the next leg higher. So stocks like this, if the market is going to do well going into the beginning next year, I would be surprised if a name like Adobe isn't in the top of the returns as a result.
Especially backed by some of that AI stuff that's going on. This is one of the big AI winners. And I got to say, when I think about some of those different AI plays, this one makes a ton of sense to me. The things that have impressed me most when I see some of those AI-generated images and videos and stuff, and it's all Adobe that's doing that stuff. They're going to be a big winner in that space. So I think 2024 could be a big year.
And that theme is obviously not done. We had sort of a big reaction to that theme, but that is a multi-year, even multi-decade theme, and charts like Adobe probably benefit from that, I would say.
Yeah, I agree.
All right. You're next. What's
Number
next here?
3, I'm sticking with financials, but I'm going kind of a different corner of. I know I'm not doing tech here.
Who are you today? Okay,
third pick and no tech. I know it's crazy. I'm looking at IAI. That's the broker dealers and securities exchanges ETF. A little bit of a different spin on financials, and the reason that I like that, if you go buy XLF right now, you're going to get 2 credit card processors. You're going to get Visa and MasterCard in there, but you're going to get a lot of big banks. That's what really kind of dominates XLF, right? This is kind of a way to play the strength in financials, but almost a little more of a techie side of financials, because you're going to get a lot of the index providers, the exchanges, all of that stuff. Some big, brokers like Schwab is in there as well, which, I mean, all the tech that they've launched in the last couple of years. So it's kind of a different corner of financials, and I like it for that. I also like that we're seeing a really, really nice breakout here. Again, taking out some key levels after getting absolutely slammed in 2022. Earlier in 2022, especially with the collapse of SVB and all that stuff.
Sure.
We saw this thing get slammed. It's consolidated down there. It's kind of near the lows, bounced. Now we're starting to get that breakout, and it's outperforming the market. Look at the outperformance that we saw back, kind of earlier in the year. That outperformance that we see, if we can get that kind of thing again and see this thing continue to move higher through those highs, back up, I like the move on IAI. I also, again, if I flip over to that longer term weekly, this is a corner of financials that has outperformed in the long term. You've seen, not huge outperformance like we were seeing with BX, but outperformed VTI over the last 7.5 years by 25%. This is a part of financials that does get a little bit of outperformance when it can catch a bid. So I'm liking this breakout. Again, taking out some of those key levels. If we can see this continue to move higher, I think there's some good opportunities in that space.
I love it, and it's striking me as you're going through your charts, the relative strength at the top, the price below. Good reason, or a good way of focusing on the story of relative strength. That has been a constant theme when you and I have talked about charts, and it's interesting to see when in this sort of environment which areas of the market are actually starting to outperform. Financials have not been one of those things that would be top of my mind as probably outperforming, but it's happening now, right? So focus on the evidence. It's starting to work.
Right.
Good chart. All right, I accept that one. That's your third pick.
Okay.
2 financials so far.
2 financials.
Okay.
I know. What do you got? Number 3.
All right, number 3. So I'm going to healthcare.
Healthcare.
I'm boldly going to other sectors, Grayson. And so I'm picking a medical equipment name. It's interesting. Healthcare is not a particularly favorite sector of mine. It's actually quite mixed, and even within groups, you have stocks that are looking very good and very poor at the same time. So it's a very, I think, a stock pickers kind of sector.
Yes.
If that's a thing, it really is quite a diverse sector with a lot of different business models represented. ResMed is sort of an unusual chart pick for me, only because I usually am much more of a buy the breakout, buy strength type of investor. But what I like about this one is this is a stock that I think has completed that rotation I like to look for from what I call a distribution phase. And I think ResMed is just a perfect illustration of the weakness that we saw in the third quarter. A gap lower, and then just no buyers came in, right? Just accelerated to the downside. So no one wants to own the stock for a couple months. All of a sudden it makes a new low at the end of October, and then all of a sudden you start to see things improve, right? We make a higher low in mid-November. We make higher. We've already gone from around 135 to 165, so we've gained quite a bit already, but we're still way below those previous levels. So I see this as being a distribution phase, what I'd call a consolidation phase, where we're sort of at an equilibrium. And now something's different. And now you see investors that are willing to pay more for this, that are pushing it from oversold conditions in September to almost overbought conditions here in early December. And the relative strength starting to improve. So I'm a big fan of being patient on names that are going lower. I'm not a fan of buying the falling knife kind of chart. But once something shows signs of life, I think it's worth paying attention to. And a lot of big gains can start by buying at a lower level and obviously riding them higher. I think ResMed is one of those names, and there are a couple healthcare names I think I could have swapped in at this point, but RMD I sort of settled in on. It's a different sort of a I guess technical diversification, diversifying in some other patterns, but potentially getting a nice run off the lows.
I like that. I mean, anyone who's looking at this chart and saying, Dave, what is this? This is so different than the stuff that you usually talk about. Go look at a chart of Netflix from a year ago.
Fair point.
It did this kind of thing, and Facebook too. Some of those big names Huge move to the downside, big gaps lower.
Yeah.
But as soon as they consolidate and they start to put in that point where it's just refusing to break down below that level,
that tells you something.
That's telling you something.
Yeah.
This is kind of reminding me of like a shorter term version of what happened.
I think that's right. And again, this is now we've made a higher low for the first time really since like July, August. So I kind of like the rotation. I wouldn't mind taking a shot at something
like
this.
character on the RSI too. You're seeing it, right?
Yeah.
It's bouncing up above, running it at the 50 level from below. Can't break above 50. Then it finally does. Then it fails to break below 50, basically, and starts to move higher. That's telling you something.
Momentum has shifted.
Momentum has shifted.
All right, your pick number 4.
All right, here we go. Technology.
There it is.
I did it.
Okay,
there we
good
go.
man.
You're proud of me. Okay, I like it. A little bit of a similar story, actually, to what you're talking about there with ResMed. So this is Cloudflare. Now, I got to say, this is different for me for many, many reasons. I like to buy breakouts typically to new all-time highs, at least to 52-week highs, but typically to new all-time highs. This is a name that's very different. I'm going to pull up the longer-term weekly once again. This is a name that went from 221 at its peak down to 37 at the low that we saw kind of end of 2022, early 2023. This is a name that got absolutely slammed
big time
in a big sell-off. I like the reset though. That's a huge, huge reset. I mean, we're looking at this on a log scale. This is a huge reset. But once again, you've seen this massive slide, then you've seen a lot of chop here in this name. It's put in that bottom though, it's continuing to move higher, and now we're starting to break out above some key levels that we that have tested multiple times in the past. Again, I mean, it's kind of that classic stage analysis, right? This has gone through the stage 4 decline. It's now gone through the stage 1 phase, consolidating before a move higher potentially. That's kind of what I'm looking for. Is this a stage 1 breakout into a stage 2 uptrend?
Right.
So going back to the daily here on Cloudflare, just a lot of chop in this name, but again, finally getting up towards those levels. Moving averages are all in great position. We've got the 20 above the 50, above the 100, above the 200. And what's changed too is nice outperformance. The relative strength line moving higher. This thing is finally starting to outperform at the top of its range. If it can make that breakout, I think this thing has a lot more room to run. You're looking at a stock in the 70s that not too long ago was trading up at 220. Now we could say that was completely ridiculous that it was trading at 220, but still, this is a company that's moved forward in the last couple of years, and it signals that investors, might be willing to take it up, another couple points here. Still below 220, but I like the breakout here on
Interesting.
Cloudflare.
So tell me this, right? So this one is overbought or recently overbought. A lot of names are kind of that. What does that mean for you when you're taking a position? Are you okay with that, or does that tell you to look for some other combinations? Like how do you handle
I am
that?
okay buying things that are overbought, but again, I have very, very strong risk management routines. I know exactly where I'm getting into that trade. I know where my stops are at. I'm also keeping track of different levels that I'm watching that are kind of the the signal that I might want to get out early. So I'm watching those trades very, very closely. So I'm willing to jump into something that is a little bit overbought. Oftentimes we see those incredibly overbought names continue to move higher, maybe at a slower pace, maybe momentum slows a little bit, but it doesn't mean that it's definitely going to collapse. I'm going to keep a close eye on it. I do love, though, to see breakouts like this. I mean, the way that I would kind of be looking at net, if this can break out, move higher, consolidate, maybe pull back to that breakout level and test it from the top. That's what I really love to see, the kind of BRB setup, breakout, retest, bounce. Those kinds of things. Same with, when you're going to play something like that first chart that we picked, BWXT. When you're talking about those moving averages, you want to get a pullback to one of those moving averages, and then you want to see a bounce. It's not that you're going to buy it on the moving average.
You want to see
it bounce off of it. So a similar kind of thing for me here. Even if it's a little bit overbought, I might still put the trade on, but I'm going to be watching it closely.
I feel like if you ignore overbought names, you miss some of the biggest winners in history, basically. I mean, they were overbought before they went up.
There's the old adage, overbought means up a lot.
Up a lot. That's exactly right. Okay, fair point. Point. I like the pick. We are going to make this a technology second half, apparently. I'll be going with Coinbase.
Okay.
So, and Coinbase, in some ways, is to highlight, and I have to acknowledge this is now the top-ranked stock in the large cap scooter rankings for StockCharts, which tells you trend on multiple time frames, pretty strong relative to other charts, and I think that's impressive. Coinbase is a tough stock to chase today because of the run that it's had, right? And
Yeah.
if you look, the chart of Coinbase, this is kind of the formula. You have these big runs,
Right.
you settle in a little bit, and then you kind of move higher.
Yeah.
What's interesting about how the chart has evolved in 2023, there have been a number of different things that have happened in the crypto space, but now we're actually setting up to put a non-technical spin on things. You have a number of things that are happening in the cryptocurrency space, particularly in Bitcoin, right?
Yeah.
There's this expectation and more and more the market pricing in a Bitcoin ETF listed in the US, which I think would open up cryptocurrencies to a bunch of investors. I would think like my dad. When my dad would own cryptocurrencies, that's a whole other group of investors that have not participated yet, and I think that would allow that to happen. Coinbase, obviously, I think benefits from that. Bitcoin halving is coming up in the first half of next year, and the market has usually treated Bitcoin very, very well after that. That's usually been a pretty bullish trend. So even though it's had a good run, the history of Bitcoin, the history of cryptocurrencies is big runs tend to beget more big runs.
Yeah.
And I think this is an important chart to watch in December just because it's had the run already. I think a pullback probably is pretty likely for Bitcoin and for Coinbase and other names as they digest these gains that they've had.
Yeah.
But certainly in 2023, those big runs and those pullbacks have been really good buying opportunities. So I think going into the beginning of next year, given those upside catalysts that I think most likely play out through the course of the next 12 months, I think Coinbase, even buying it here, you'll probably be happy a year later with a nice run higher. So overall, and again, I think the challenge of something like Coinbase and most cryptocurrencies are the volatility. So you and I talked. I don't own Coinbase, but I do own GBTC and others.
Yeah.
That one thing can single-handedly ruin, make your day or ruin your day. Huge moves, but overall, when the trend is positive, it's kind of like owning a leveraged ETF to the upside. You tend to benefit from the upside. So overall, I think the long-term story is pretty healthy here. I think in the short term, I'm going to be patient, and I'll be looking for a pullback in December into January, but pretty decent setup here.
I like that chart. I mean, similar to what we're talking about with Cloudflare. Like you've got this, stock that's come way off the highs.
Yeah.
Now it's put in that clear consolidation kind of down low. I mean, draw a horizontal line across that thing. That's a beautiful breakout. That it's kind of resetting.
Yeah, like here.
Yeah.
No, it's absolutely true.
Yeah. No, that's a very, very beautiful chart. Do you think about, I got to ask you, when I think about a name like Coinbase, kind of like we were talking about with Costco, right? Is it a staple? Is it a consumer discretionary stock? I mean, Coinbase is kind of a funny one too. I know we bucket it in technology. That's what it's classified as. Yeah. But it's also, in some sense, a financial kind of,
so
a new financial.
Coinbase has the issue that any of the exchanges have, Visa and MasterCard, right? I mean, you have a lot. You think about the major exchanges, they're more data companies than they're more technology companies than financials. If you look at Coinbase, it's an exchange, but it's really a technology company. I mean, it's a bank in some ways. I mean, that's what they're trying to promote it.
It's kind of a blurry line.
The less you think about where to bucket stocks, the happier you will be, I found, because I've spent a lot of time doing it. It's a rabbit hole. And it's not just financials. I mean, it's a Disney. Where do you put a Disney or an Apple?
Or solar stocks. Is it technology? Is it energy?
Any of those. So I think, and again, I think that's where technical analysis can be really helpful because it's less about where you bucket the stocks. It's more about what's working and what isn't. And the themes that are working play out on the charts. The charts are what tell you that's happening. So Coinbase is a tough one to label, but I will label it a chart going up.
Right? We'll label it a chart going up. I like that. Yeah.
All right, your final pick.
Number 5. All right, I'm switching back to my one love, industrials here.
Wow.
Homebuilders. I'm going with XHB. This is the S&P Homebuilders ETF.
Yeah.
A really, really nice breakout on this thing. We saw a big, big pullback. This was, let's see how much that was. About 20% pulling back, even below the 200-day. But after a huge run up, we saw from the end of 2022 into kind of the middle of 2023, XHB went on a huge, huge run to the upside. Really outperformed everything. We saw that kind of reset a little bit. Now it's made its way back up to those highs, and we've made that breakout. I love to see that. And again, this is another space that I'm looking at and that I like because we're seeing that strength backed by a lot of names. This is spread out. It's not just one or two home builder stocks that are pushing this thing up. It's a huge, huge collection of home builder stocks and industrial stocks that are driving these ETFs higher. There's a couple of these home builders out there, the ETFs out there. XHB was the one that I chose because I had to pick one. But nice setups across the board. Individual stocks, the ETFs, there's a lot to love in this space. The other thing that I do love about this too, when we talked about kind of the reset, relative strength outperforming VTI again, but also now breaking out to new highs on a relative basis. So you've got kind of this doubles breakout. I love to find those on a chart. If I can find something that's breaking out on price and breaking out on price relative, that's a thing of beauty. And we're seeing that on XHB. In the long term too, we'll do a 15-year chart. This is a group that has outperformed, a little bit more narrow, 7.5 years. This thing looks pretty dang good. I really, really like this long-term weekly. We're seeing a beautiful breakout to all-time highs here on XHB. Wow. This is a space that's really, really interesting because it can be so interest rate sensitive, but as that story starts to change, this space gets even more interesting. So one I'm definitely watching, XHB. Again, I would say on the weekly here, would look for a little bit of a reset. I mean, when you think about the number of weeks that this thing has run up and the size of that move, a little bit of a long in the tooth kind of move here. But still breaking out.
The setup is still good.
Yeah, it's a really nice setup.
If you look at the chart, if you look at the chart, right, September, October, we sold off, and then just the last 6 weeks, it's regained all of that. It's retraced it back. On the weekly chart, it's sort of a cup and handle type of pattern, and we're just sort of completing that handle. It's a really interesting setup. I told you I almost picked Pulte Homes, PHM, which is one of those names here. And there are a lot of them, I mean, a number of them, just really nice breakouts. And what's interesting is in late October, they looked quite weak, right? I mean, breaking down through moving averages. And again, a lot of other names did, but really shows you that the strength that we've seen in the last, since the October low, really.
This thing caught a lot of people off guard, I think. Because, a lot of people were watching that move coming out of Homebuilders, and they were saying, wow, this is kind of crazy, especially given the interest rate environment. And as soon as it reversed, as soon as we got that weakness kind of at the end of the summer into the fall, people said, yep, see, I told you so. There you go, Homebuilders falling. It's not going to happen. Right. And then all of a sudden they've reversed rapidly, made their way back up to those new highs. I think a lot of people have kind of gone, oh, whoops.
I guess this is better than we thought.
I guess it's better than we thought,
I mean, and obviously a big part of that story is interest rates. I mean, this is in line with the 10-year yield coming down so much, so all of a sudden houses seem way more affordable. And it's so funny, coming up to 4% on the 10-year, it felt like houses were incredibly expensive. Now that we've come down to 4, it's like woo!
Party time everywhere.
It's time to buy. But I like that breakout. And again, I can't deny the move to new highs. The weekly chart tells a great story.
The weekly chart, that's what really sells me on this thing. The weekly chart is just a thing of beauty here on XHB.
Strong pick. I agree. I don't disagree with that one. All right, my last pick.
Number 5.
I'm sticking in technology. I feel very Grayson in my picking here this time. It's been fun to sort of look at technology a little more. And it's so funny. I was drawn to these so much because, again, what I think caused me to maybe pause a little bit on some of the other sectors, just what you mentioned with the home builders. They've run so quickly, it's hard for me to think this moment is a good moment, but the long-term story I think is pretty positive and gives me confidence going into next year. Zscaler actually reminds me in a lot of ways the first couple charts we were talking about, like a BWXT, a Costco, kind of these, sort of based a little bit, but just these nice breakouts. And, when in doubt, I guess we're finishing with one of those higher highs and higher lows kind of charts.
Right.
Zscaler is interesting because, and again, I think there's just been such a change and a different look to this chart than a lot of other growth names in that it really sold off in the first half of 2023. It made a new low in May, a new 52-week low, while other things were actually recovering a lot better. Then you had this gap high, and what I love about the chart of Zscaler is this moment right here. You have that, that first initial gap higher, the breakaway gap, and then additional buyers just flooding into this, right? Absolutely. So it's not like we gap up and no one, everyone wants to get out. A bunch of new buyers coming in, gap and a nice follow through. But then you settled in here, and I think this was a tough name to argue for in June, July, August. Other things are doing better. The Magnificent Seven are making new highs, and this all of a sudden looks like it's stalling out. But then trust when something makes a new swing high, a nice pullback back into that range, and now a follow through as well. So overall, I think this is one of those names that's just a classic rotation from a downtrend phase to an uptrend phase. It's now above both the moving averages. It's overbought right now, as many names are. But overall, I mean, I'm inclined to assume that a trend like this is going to continue until proven otherwise. So I think higher lows are sort of the general thing you're looking for. The other thing I liked about this one, by the way, when I was looking through a bunch of charts, is the RSI. So a number of these times here in September, again in late October, we pulled back to the 50-day moving average after making a new high. The RSI bottomed out just around 40, which is just kind of a classic kind of bullish phase, right? These higher highs, higher lows, pull back to a decent level. It's a normal pullback, and then you kind of reset and make a new swing high. So I'm going to assume that that kind of pattern continues. And then, as you alluded to, right, use good risk management tools to tell you when that's no longer the case, and you get out and minimize your losses. But overall, I'm finding a bunch of names like this in technology. This was one of a number that I could have picked. I almost went with like an Affirm or something like this, some of these breakout candidates, but I thought ZS was a good representative name of some of the strength we're still seeing in technology here in December.
And a long-term trend on ZS too is a nice look.
Yeah.
But go back for a second to that daily you had. I mean, again, we're talking about the RSI. I love the change in character right on that gap. You've got, if you kind of draw some horizontal lines on that RSI, in your head. You've got a character of the RSI really primarily sitting in that kind of bearish range. Below 50. And then it changes all of a sudden. And if you kind of draw right over from the right, the RSI changes, and now it's really struggling to go, right, like you said, below 40. The character of the RSI changes, which is a thing of beauty. I like this chart. It's a good one.
Yeah, and it's interesting, I mean, how, and again, a number of names have had a nice recovery and again, shown strength in November, but I'm not seeing a lot of evidence on certainly any of the charts that we've looked at, suggesting that this big rotation higher is ending at any time soon. I mean, the charts will tell you if that's not going to work, and if 2024 is going to start in a pretty weak fashion, the charts are going to roll over. But for now, they're kind of holding up pretty well, I think, overall.
Yeah, it's a nice name.
Those were 10 decent picks here. How do you feel going into the beginning of next year? What are the things you're going to be looking for? Because I know we're going to be doing some year-end discussions. We're going to be thinking about next year. Give us a preview of your kind of 2024 outlook. Where are you looking?
I want to see the strength continue in some of these other sectors. I don't want to see it just in tech. I don't want to see it just in the Mag 7 stuff. I love to see the strength in industrials because it's spread out across a whole bunch of names. I like to see the strength in financials. If we can see that pick up, again, you can spread that strength out across a lot of names. And the other thing, I really want to see the strength in smalls and mids continue. Those are spaces that have, like we said at the beginning of the show, refused to go lower. But we got to get them higher now. It's one thing to not break down, but it's another thing to actually start going up again. So hopefully, with the interest rate environment kind of changing, Fed policy changing, I'm thinking that those things are going to move higher. I really do think that small caps are an incredible coiled spring right now. That's kind of where I'm keeping a close eye. Especially you look at something like IWM, the Russell 2000, has gone for the most part absolutely nowhere for about 6 years. There's been a lot of talk about we haven't had enough pain in the market. If you're just looking at the S&P 500, it's one thing to say we haven't had enough pain in the market. Anyone who's been sitting in IWM for the last decade is saying, I've had enough pain. I've gone nowhere for 6 years. This is painful. So I'm looking at some of those spaces and thinking, with a little bit of change in policy, hopefully we can push those groups higher. If we do, I think this market has legs. So
I agree with everything you said, and particularly the broader participation, right? I mean, for a while there in 2023, we were talking about the strength in technology and communication services, and then everything else. It looked pretty bad. Now it's starting to change. You find a lot of those beaten down areas of the market are actually starting to participate. I think the bull case for 2024 involves broader participation from those areas of the market. The other thing I would add is that 2023 was really about a Fed hike cycle and what that looked like. And for a lot of investors, being under-equipped to handle a rising rate environment, what that will mean. And so I think now you market pricing in rates coming down as early as March Fed meeting, which means we're going to be you're going to have another hat that you swap on to sort of deal with that. But it could be a really good setup for different areas of the market. And the last thing I would say is technology strikes me as one of those really interesting areas that has been actually good offense and good defense. So when the market's doing well, you have the Zscaler, Adobe types of names that do well. When the market goes poorly, there's some really blue chip defensive areas of technology like a Microsoft, Apple that tend to hold up pretty well. It's hard to argue. Have done very, very well. So I think we're going to need to rethink what really is offense and defense, and I think there could be some different sectors in those buckets than maybe we're traditionally prepared for. This was awesome. This is the last one of the year. I hope we keep this going in the new year.
Let's do it.
This was awesome. We'll plan for it.
Yeah.
Folks, that's it. Thanks so much for joining us for the Final Bar Special Edition Top 10 Charts to Watch here for December 2023. Grayson, Roze, and Dave Keller here from StockCharts.com. Have a fantastic holiday season. We'll do some more of these videos in the new year, but until then, don't forget to like our video, subscribe to our channel, and check out the Stock Charts bookstore while you're there. Pick up your Stock Traders Almanac today. I'm Dave Keller with StockCharts.com. Have a good one.